Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacino. How's everyone doing? Happy Groundhog Day. 6 more weeks of winter projected. I think the groundhog system is flawed. I demand transparency into the groundhog system. Good morning, Dave. Good morning, Patrick. Don't trade angry. Angry because of Groundhog Day? Or because 6 more weeks of winter? Why would we be trading angry? Good morning, Donald. But that is good advice. You should not trade angry. Good things do not come from trading angry. Good morning, George. Predicting 3% up Thursday. Well, you're already 2% up in the NASDAQ, so... Good morning, Martinez. Good morning, Options 22. Sterling with all the information. By the way, Sterling putting in the jobless claims and other things. Needs to do some back testing on the groundhog system. Well, isn't it if he sees a shadow or not, and you're doing it in the middle of winter in Pennsylvania, which is notoriously cloudy? So I think it's biased one way or the other. And then if you look at the correlations between when the groundhog predicts 6 more weeks of winter and what actually happens, it's not a very statistically relevant decision. So I'm saying, you know what? Not worth it. Not worth it. We're not gonna bet on the groundhog. There's no advantage. There's no advantage. Although I would like winter to be over. So we had the jobless claims coming in better than expected, better than previous. Job market still posting strong numbers, even continuing jobless claims coming down from previous and better than forecast and consensus. What else do we have? We had some labor costs coming in a little better than expected. Productivity coming in way better. So we have factory orders out 30 minutes after the open, and that's about it. That is about it. Very quiet day going into big earnings reports this afternoon. And remember, non-farm payroll tomorrow, non-farm payroll Friday. So far, Google on a tear, up over 5% already. At the market, just buy everything. Just go ahead and buy everything. Even if it's not a bargain, just go buy it. That's the mantra. Healthcare sort of getting slammed. Defensive stuff is going to get rotated out of because it's just go ahead and buy. No matter what the price. So far, comm service is up the biggest. Consumer, cyclical, and technology. Everything's fine. Soft landing incoming, but the Fed's going to pivot with a soft landing. Don't understand the logic, but don't need to. Another 25 still projected for March, 22nd of March. So that's, 6 weeks away. Also, ECB 50 basis point hike, 50%. 50 basis point hikes. And the Bank of England, 50 basis point hikes this morning. ECB press conference is going on now, so I can't pay attention. Still solidly in greed mode. By the way, with the short-term options trading, we're still just barely into positive gamma territory because this number keeps shifting up, so it's roughly 4,100 at this point. Remember, on a continued rally, there is dealer selling into the rally to hedge. So not saying it can't rally, it can rally substantially, but you will get a slight headwind of dealer selling into that. That's where we sit right now. After we had some ConocoPhillips this morning, we had Bristol Myers Squibb, Hershey this morning, Merck, but nothing really market moving. It's Amazon, Alphabet, Apple, Qualcomm, Starbucks, Ford, U.S. Steel after the close, but the big ones will be Amazon, Apple, and Alphabet. All right. Good morning, Anissa. Expecting a hawkish conference from the groundhog? No, the groundhog's gone dovish. Because the financial conditions they are looking at are not the same as what you think they are. All right, S&P, major support level, bumping this up. Major support level at this point is back at about 40.93 to 4100, trading 41.73 right now. The 87.5 harmonic, which has where the probabilities are, is 42, 24, 25. A projection harmonic 42.29. And then the next cluster 42.64 to 42.78. And then it could return to the August highs. So that's where we sit right now. Going in on the short term. Now remember, we'll have to see with earnings. We had the nice little pause there at the 41.49, 41.50 area. So that's what I'm watching for on any pullback. Other than that, everybody's off to the rah-rah races. So I will be watching on any pullback or pausing area with the rising 4-hour rotation zone. More aggressive is it's hugging that 1-hour rotation zone on a little pullback. 41.60 would be my key pullback level going in the open. Other than that, we have the upside targets. The NASDAQ. Let me say good morning, Josh. NASDAQ getting near major resistance levels. Well, we're going to go through that now. Good question, Paul. So, looks like we're going to close above, unless something disastrous happens, looks like we're going to close above the 62.5. 12,697, 12,700 was the next harmonic. Then the next key level is 12,841, 12,926. However, with this key close, let me pull off some of these levels because first retracement area with the rising rotation zone is back at 12.2. We'll just call it 12.250 area because it's an area. So it's a long way off. And even a rollover to that. And cycles still are at the top on the weekly, so we will get a rollover. It's just going to be gauging how much it does. Your first major support is back at this 12.250. If we close above that 62.5, probabilities are still for the 87.5. A little, again, technically, the 75 is a little higher probability than the 87.5. Why do I target the 87.5? Because even though 75's a little slightly higher, the 87.5 has very, very strong probabilities, and many things run up between these 87.5 and 100. So my minor target would be 12,926, and that does not change unless it's a substantial pullback. Substantial, and then 13,333. So those are the key target areas going into the open. Again, we had the little micro pause at this 12,500, so that's my support. This market just keeps launching. Minor areas of support, 12,600, 12,605, and then 12,550. Other than that, it just wants to be bought. So, and remember, we are still in trailing mode. If we get a pullback with some new add-on signals, I'll let you know. But this is nothing substantial yet. There was a rotation entry yesterday with the break above, back to the rotation zone and the break above the highs. But other than that, it's just in trailing mode, watching for a new pullback. Dow, not buying it so much just yet. But the key targets on the Dow, 34.6 and 34.9. Major support all the way back at 34.920. So until the Dow gets out of that range, it's on the back burner. Russell reconfirming that 87.5. Why are their shorter term harmonics still on here? Because 1967 is a pullback level. So remember that as I update them. Remember that. And Still going to leave it anchored on the big thing to the rotation zone. You could technically do this one. I'm just leaving it anchored here for now and still just really targeting this 2020 to 2025. 2020 is being the cup and handle. 2005 is a stop raise, and there's a little hiccup in here in this advanced clear path area, so do not ignore that area just above 2000. That's where we stand, by the way. Russell still has the bigger double. So we get a weekly close above 2033. Russell could theoretically, based off the targets, retest the high areas from last, not November of 22, but November of 21. So that would be another bullish signal. All right, but it's still ways off, and that needs a weekly close. Don't know whether it will happen. Can't trade what we think might happen. We have to trade what is happening. So, the spiders, again, we had the potential double, but with the Fed, the dovish Fed yesterday, we came up 413.39, and then coming back down. This is why I really like putting up harmonics. You can see here, coming up here, coming back down and closing at the other harmonic. Right now, 414.39, 415.15 is the next area, and then the next key major target is 420.30. On a minor level, we don't have a strong pause here, but I will put up the minor levels. I know people try to do this trading intraday. So you got this little cluster at 415.15, pre-market gap up 414.30, so that would be my target on a continued rally, then 417.02. On any pullback, 413.67, and then it would be nothing till the close besides using shorter term retracement harmonics. That closes 410.80. Major support coming in at that 410.50 to about 409. So technical damage really can't start happening until you at least break through that 409, and that doesn't even take it back to the daily rotation zone. The Qs. Big gap up today. We had 302.53 from yesterday. What are the next key levels we don't have? Here's where I want to see where the old harmonics take us. So, well, that's sort of nice. Now, because now I can take off the dink harmonics level. So we got 307.53. Then remember we have a gap fill to 311. Let me get it exact. 310.74. So above 307.53. We're trading 307 pre-market. 310.74. Do not ignore that level. And then on a pullback basis, we don't have much until first would be yesterday's highs, 303.43, then 302.20 to 392. To the moon, everyone. Everybody loves going to the moon in this rocket ship. Yay, DAX running like no tomorrow. Next target 15, 17, 18, which would be the 87.5. Nothing else to do, but that's the target key support coming in at 15,254. The notes, we got that return to the 200. Rally continues, watching for the highs from the 19th of January. And then we have, remember, anywhere up in here is a significant topping zone. Now, if the notes get above 117.01, it's going to get very interesting because that has a continued rally higher per probability shift. So that's my major level. Support now, major support coming in at 115.10. Remember, we have super strong soft landing, but the Fed's going to pivot. So just keep that in your minds. I don't know why they'd have to pivot if it's super strong. Nothing. I'm still watching for this $100 mark. Key resistance. Key resistance coming in at 101.21. Still, we got weekly cycles at the low, but no low put in yet. We have that key, just a 100 round number, and a harmonic 101.16. If we substantially break through that, the next minor area would be 98.75, and then you got potentially round trip to the 200 weekly, 97.65. But that would be put the dollar in massively oversold. So we shall see no fear in the markets with the VIX. Nothing to look at there. Crude, pull it back to that 50% of the trigger point of here, and in the 50% to the 62.5. So bigger. That's why we always use stops. We know where the stop level is, but the pattern still has not been stopped out, with cycles very at the bottom and getting into oversold conditions. So keeping a close eye on crude, but nothing yet to do. What else? Gold trying to run again higher, still in trailing mode. So not much to talk about with gold. When we get a pullback pattern, we'll let you know. Silver finally catching a bid and looking to break out. So silver 25.26 and then 25.49 are the next higher targets on silver. I'm going to be watching to make sure it closes above 24.48. Copper, again, stuff getting bid up today. Copper still holding at the daily rotation zone, but there's no cycles of now to the bottom, but no key entry signal just yet. Japanese 10-year bonds, now I'm really paying attention because it's getting potentially above this 50 basis points. So that'll be interesting with Bank of Japan. And we're continuing the rollover play, watching for the retest of these lows back from the 16th. So still hugging the daily rotation zone down. Really nice hugging of that. I was waiting for that breakdown, as I said, below 129, which now target area. You can do the retracements up here, but everybody can figure out that. Euro, little pullback here, little pullback after that 110.37 harmonic area when we got to 110.33, and now key support coming in at 109.30. So not still much to talk about here. We'll see if this is a pausing bar and raise the harmonics again. The pound still caught in this little sideways channel. Long term, you still have the double top in place. There's nothing for me to do in the pound. Bitcoin run. I'm surprised it's not on a little more of a tear with the NASDAQ in full-blown launch mode. But key resistance area is still 24,460 to 24,500. Tesla, with this gap up, the potential doubles off the table, so still no triggered bearish pattern. 190.52, 238 are the key levels up in there. And then 213.38. Those are your key levels. Again, unless we got below 163 or we get a topping pattern, which we do not have yet, there's nothing to do from the bearish side. All right. A different kind of bull market. Didn't know there was a different kind of bull market. Good morning, Jacob. The groundhog is committed to a return to temperature stability. Okay. Maybe he could do climate change quantitative easing. I think they were talking about something like that in the ECB. Quantitative quantitative easing based off climate change. The groundhog would be a perfect candidate for that. Good morning, Connor. Well, I don't want him to have it sufficiently cold. I want the warmer end. Come on. Let's see. What is Microsoft? We're gonna lead in the AI era. Does anybody see this AI stuff being an absolute potential disaster? Looks like the potential daily double in the S&P, or in the spiders. Yes, it was off the table. In the S&P, we are close. Not really. This was the double because it needed that 4 hour to get there. But this is technically still in, but we're a ways off. You know what? I'm going to just pull this off for the time being. This $20 super chat. I got a dime and got some time to hear your story. All right. Warfrat. Very good. One of my favorite songs. I think you're going to get not another peak in inflation, but I think we're going to get another pop in inflation. I think even in the Eurozone, it's going to get interesting. They're going very dovish. Going very dovish. Again, big shout out to Dave for the super chat. All right. I don't disagree, but we need it keeps climbing and there could be a rug pull, but there's no topping pattern yet. We got the probabilities still for higher prices. So you got to trade, and again, it's trailing mode until it ends. Hourly double on crude. Hourly double? Yes, that is an hourly double, it looks like. So you have your little hourly double. It's a little nice reversal with a potential 78.35 area. Thank you for pointing that out. Oh, well, late, but Waka made it. Where do we sit? I know my dead tunes. I do know my dead tunes. I love music. Why would AI be a disaster? I don't know. We don't have any movie precedences. Amazon and Apple are going to rip after the bell. Well, they're already ripping now. This may be a purely anecdotal, but I've noticed the indices keep setting up potential double tops and then ripping through them, levels that invalidate them. Which is what you have in sort of this grindy market setting up double tops. But remember, that's why we look, and they're potential. A lot of them, how many of them have even been confirmed? They're potential, and then they just grind. Because at this point, it's the markets will go higher until they stop. Which is why it's so handy to note that. Because, hey, and this is where people still get confused. A potential signal is just a potential. It's something that you can mark off key levels with. If it triggers, now it's an actual. Right? So that's why it's handy, because it keeps you analyzing both sides of the market, and until it's over, the trend is the trend. All right, I'm going to jump with a couple minutes to go into the open. Remember, keep an eye on the tick today. Don't get caught off guard with earnings this afternoon. 41.60 is the pullback area that I am keeping an eye on. So that's where we sit. The matrix. Yep. Maybe we're all already plugged in X machine. Yes, you got everybody's too good here. 1 in 5 of the potential double tops I've been watching have confirmed, but none have triggered. So there you go. And we've had double bottom. We've had double bottom. We've had inverse head and shoulder. So those have triggered. Where do we sit with with NVIDIA to the moon. Is it pausing? Remember, 214.71, 223.14, 231.57. All right. I will be back after the close. Everyone have a great trading day. Thank you again for the super chat, and bye for now.